Welcome back to Inside the Markets from GMS Podcasts, where we unpack what is moving, stalling, or surprising the ship recycling world. As we close out October and step into November, the word this week is stultifying. The market feels slow, currencies remain shaky, and although steel prices are trying to find some balance, sentiment across the subcontinent is still muted. Joining me again is Simos Dimitriou, head of our Dubai office. Simos, last time you were here, we spoke about tension, and it seems the ghosts of that tension are still haunting the markets. How are things looking from Dubai this time?
It has been another strange month, Jamie. The overall tone remains heavy. Globally, oil prices slipped to around $60 a barrel, and OPEC has announced cutbacks in supply for early next year. Currencies continue to fluctuate, and the ship recycling market is feeling the weight of all this uncertainty. Across the subcontinent, the story remains pretty consistent. There are very few sales, limited tonnage, and plenty of caution. Supply is still tight, and every market is struggling in its own way.
Let's start with India. When we spoke in September, the rupee was already under pressure. What has changed since then?
India continues to wrestle with a weak currency, now trading near 88.7 rupees against the dollar. Steel prices have hovered around $385 per ton after some small declines. Activity is minimal, and a few tankers and bulkers have arrived, but not enough to spark real movement. A new concern is the emergence of a two-tiered market caused by sanctioned vessels being sold well below normal market prices. These discounted deals are distorting local expectations and creating uncertainty for both recyclers and owners. Despite this, India remains the most reliable destination from a compliance perspective. The infrastructure and the number of HKC approved yards give owners comfort. The fundamentals may be shaky, but operationally it remains dependable.
And how about Bangladesh? It was very quiet last time. Has that changed?
Only slightly. A few end buyers have been active in Chittagong just to keep the yards running, but most of the market remains subdued. Plate prices slipped to about $529 per ton, and the local currency has weakened further to around 122. Many rolling mills are still struggling to sell recycled steel, which limits demand for ships. On a positive note, progress continues on the compliance front, with more HKC approvals expected soon, taking the total to around 21 approved yards. However, the overall outlook is still cautious. The political uncertainty ahead of the elections in early 2026 continues to weigh on confidence.
Pakistan was leading on price earlier this year. Is it still holding up?
Somewhat, yes. It remains the highest price destination on paper, with plate prices around $614 per ton, but that does not tell the whole story. There's cheap important Iranian steel that has flooded the local market, and this is hurting recyclers' ability to maintain margins. In addition to that, Pakistan is following India, being fully aware of the decline in India and the subdued sentiments there, and thus the Pakistani shipbreakers are also lowering their prices accordingly. Though the local currency is stable at about 283 against the dollar, yet the lack of HKC-certified yards is creating operational challenges. Despite having the strongest prices, the actual pace of activity remains very slow. Owners remain hesitant, and practical issues continue to overshadow the price advantage.
From where you sit in Dubai, what are the main conversations you are having with owners right now?
Most of the discussions revolve around tankers. Older crude and product carriers are nearing the end of their trading lives, but owners are still holding off because freight rates are giving them just enough incentive to keep trading. What stands out is creativity. Many owners are exploring forward delivery options, leaseback arrangements, and other structured deals to keep ships working while preparing for eventual recycling. Dubai continues to be a hub for these complex deal structures, connecting Asian tonnage with global capital.
It feels like global uncertainty keeps feeding into the market mood. Do you see that reflected in owner sentiment?
Yes, absolutely. Every conversation now touches on broader issues such as trade policy, oil prices, inflation, and currency risks. Owners are cautious about timing and they want to avoid selling too early, but also do not want to be caught by sudden drops in price. Confidence is low but not absent. People are waiting for clearer signals before committing to recycling decisions.
If you were to summarize your outlook for the next few months, how would you put it?
Controlled stagnation is probably the best way to describe it. India will stay soft but stable. Pakistan will continue to lead on price but face operational limits. And Bangladesh will likely remain quiet until after the elections. We may see a few older bulkers and smaller tankers go to the beaches before year end, but overall supply will remain tight. The real movement might come in first quarter of 2026.
Let's end with a quick forecast round, Simos. One word to describe the current market?
Sluggish.
Which ship type will dominate recycling next?
Smaller bulkers and smaller tankers.
Which destination is most reliable for owners today?
India, because of its compliance record and yard readiness.
Biggest near-term risk?
Currency volatility and the lack of confidence among recyclers.
And what are Middle Eastern owners watching most closely?
Oil prices and freight performance, I would say. Those two remain the heartbeat of their decisions.
That wraps up this week's Inside the Markets from Dubai. We have heard how currencies, sanctioned vessels, and slow supply continue to shape the end of 2025, and why Dubai remains a strategic hub for structuring deals and reading the pulse of global recycling. My thanks to Simos for joining and sharing his insights. Follow GMS Podcasts on Spotify, Apple Podcasts, or YouTube, and connect with us on LinkedIn for the latest ship recycling intelligence. Until next time, stay informed, stay compliant, and stay ahead.